Hello everyone, welcome to Options with Doug. Streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation. And I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks, the Mag 7 stocks that I follow, as well as the equity index futures, the SP500 and the NASDAQ 100. And for the SP500, SPX is the underlying index, SPY is the ETF version of that index, and ES is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and NQ is a derivative of NDX. And just like the SP500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups or entries and exits. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Gray, welcome, glad you're here. Hello, everyone else, welcome, glad you're here as well. All right, here's my agenda for today, Wednesday, May 1st. First of all, I want to go over news items, economic data and events and earnings for yesterday, today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, time allowing, and then I'll take a look at the live market. And wherever I am, I will switch over to the live market, the SP500, at 2 p.m. That is that's when the FOMC announcement comes out. All right, so let's start with news items, economic data, and events. So first of all, AMD and Amazon reported earnings after the market closes, and I'll cover both of those stocks when I review setups from earlier today. And also today, let's take a look at the S&P 500 futures, the ES futures. There was a Treasury refunding announcement at 8:30 a.m. Eastern Time. Bullish reaction. 8:30 a.m. Eastern Time, again, Treasury refunding. And then at 10 a.m., that was ISM manufacturing PMI data came out. It's kind of hard to tell in this jumble of price action That was at 10 a.m. There's the reaction. Looks like kind of up and down. And then, of course, the big event of the week is the FOMC rate announcement and statement at 2 p.m. And then the press conference begins at 2:30 p.m. Just as my webinar will be ending. All right, so let's just take a quick look at the CME Fed Watch tool. And I think we're all pretty familiar with this. Current target rate, 525 to 550. And there's about a 99% chance that there are no changes to the current target rate. All right, so for the rest of the week, quickly. Thursday, after the market closes, Apple and Coinbase report earnings. And then on Friday, the big data release of the week is the jobs report, 8:30 a.m. Eastern Time. And then at 10 a.m., there's more PMI data. I believe that is the ISM Services PMI. All right, so that wraps up the week. All right, so let's move on to positional analysis now. This is the SP500 futures in Bookmap. Let's take a look at a higher time frame first before digging into this chart. I'm going to go to a one-day chart for SPX. This is the underlying index for the SP500. This rally began at the end of October last year, 5-month rally. All right, let's take a look now at a 1-hour chart. So SPX, one-day chart, 5-month rally. Now let's go to a 30-day 1-hour chart. This is the top of the green line. And this current correction began April 1st. And then the rally attempt began the Monday after April expiration. So the dates here are important. Correction began April 1st, and then the rally attempt began the Monday after April expiration. That's pretty typical, a tone change after expiration. All right, also yesterday, there was some data that came out at 8:30 a.m. Eastern Time, and it's certainly not typically on my radar, the employment cost index, and that seemed to trigger this huge drop in the SP500 yesterday, also the NASDAQ. So that was the employment cost index that came out greater than expected, 8:30 a.m. Eastern Time. And that, again, that seemed to spark the move lower yesterday. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. This is what the options market is pricing in, the price range for the week for SPX. This is based on the closing price of SPX on last Friday. These levels remain in place for the entire week. The dashed blue lines are showing the lower and upper daily expected move. This is also based on the options market, based on the closing price yesterday. I do post these levels in Discord every day. And there's a question about this yesterday. This is what the options market, collective options market, is pricing in for movement for the S&P 500 or any instrument for any time frame that you're looking at, whether it's a week, a day, a month, or a year. All right, so again, the weekly expected move, that remains in place for the entire week, and the daily expected move changes every day. Note for today, the expected move was about plus or minus 45 points. compared to the day before, which was about 24 plus or minus 24 points. So a higher expected move based on the data and the event today, the FOMC. All right, let's take a look at the other levels on this chart. So the dark red lines are Spotgamma levels. These are available to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim. And these are proprietary levels. Here's the put wall. This is the strike with the largest net negative gamma that can be expected to act as support. That's also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma, and that is by far where most of the gamma-weighted open interest is concentrated. Above that is the volatility trigger at 5,075. That's Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their delta exposure. That tends to enhance or increase volatility. So note that SPX is well in the negative gamma territory. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to edge their delta exposure. That tends to lead to more mean reverting price action. And then the call wall moved up to 5,200. That's the strike with the largest net positive gamma that can be expected to act as resistance. So well out of play up there at 5,200. All right, so shifts in levels. For the SPX, volatility trigger shifted slightly lower, and the call wall shifted higher. And the same story for SPY. Volatility trigger lower, and call wall shifted higher. All right, let's wrap up our view of SPX by taking a look at the levels in play for today. And go to a 1 minute chart here. Squeeze this down just a little bit. Oops. That's going to mess up this chart. Sorry about that. All right, let's try that again. All right. So we know that 5,000 is below the 5,000 put wall, absolute gamma strike, and SPX trading below the lower weekly expected move. That did act as resistance earlier today, and also trading below the volatility trigger in a firmly negative gamma environment. All right, so this is the ES futures and Bookmap. I like to show the SPX and SPY levels on this chart. So I use my own cloud notes to do that. And we can zoom here. Here's the 5,000 level down below. And if there's a negative reaction to the FOMC today, that level certainly may be in play and should act as support. All right, so for today, the level that has been acting as support is the SPY 500 absolute gamma strike put wall, acting as support multiple times today before the cash open and after the cash open. All right, so that SPY 500 level, very important level. All right, let's move on to NASDAQ. Take a look at the landscape at NASDAQ. All right, so earlier today, NASDAQ was making a series of lower highs. Let's take a quick look at the underlying index charts. Let's go to QQQ. This is a 1 minute chart. That 422 level, that red level, that's actually 422.01. That's a combo 2 level. And then 421, just a round number, QQQ, acting as support. All right, let's take a look at NDX, then we'll get back to NQ. And the main level here for NDX is the 17,396 zero gamma level acting as resistance. And note the put wall is still above the call wall for the NDX. Also shifts in levels for NASDAQ. There was a bearish hat trick for QQQ. Volatility trigger put wall and absolute gamma strike all shifted lower, and the absolute gamma strike and put wall are at 420. So let's see, we can see that just below here. Sort of important levels just down below. QQQ 420 absolute gamma strike put wall, and the 17,250 NDX absolute gamma strike and call wall, which again is below the put wall. All right, so there's that NDX 396 zero gamma level. And note that NQ is trading below its lower weekly expected move. All right, I talked about shifts in levels, bearish hat trick for QQQ. All right, let's wrap up our positional analysis. Let's just take a quick look at Gamma Notional and the Vanna model. This is market maker's position on the gamma curve at the beginning of the day. Very negative. For the SP500 and NASDAQ. All these numbers did shift lower from yesterday. So again, very negative. This means in a negative gamma environment, traders are long puts, market makers are short puts, hence the negative gamma, and they have to trade with price in both directions. All right, so let's see a graphical representation of that. Let's go to the Vanna model. We'll just take a quick look at this. What this chart is showing is market makers Delta Notional. On the vertical axis, spot price for SPX. On the horizontal axis, this purple curve is showing how market makers Delta Notional may change with changes in price and applied volatility. That's the one that we want to take a look at. Let's check the current price of SPX. So right around 5,024. Let's find this on the chart. All right, so here's the current price, somewhere around here, these two lines. So what this chart is showing is if price increases from this level, market makers Delta Notional will decrease, and implied volatility will also decrease, and they can buy back short futures. So they will be trading in the direction of price. On the other hand, if price continues to drop, market makers Delta Notional will increase, and they will have to sell futures to hedge their delta exposure. So in this negative gamma environment, the Vanna model shows that they are trading in the direction of price, either up or down. All right, so let's move on and review some setups from earlier today. So I've got about 10 or 11 minutes. All right, so first of all, everything that we've looked at so far, this is based on static data. Now I'm going to move on to the execution part of my process and look at real-time data. And I'm going to start by taking a look at what options traders are doing today. Note there are two. This is this is the hero signal, hedging impact real-time options. And this is available from Spotgamma, available to Spotgamma subscribers. Note there are two choices now for the SP500. This first signal that we're looking at right now shows options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So that's the signal that has been available for quite some time. And just as a general guideline, This chart is showing price for whatever underlying instrument. This is SPX, price with the white line, hero signal with the purple line. A rising purple line indicates traders are buying, taking positive delta options positions. They're buying calls and or selling puts. And a falling purple line indicates traders are taking negative delta options positions. They are buying puts and or selling calls. All right, as I mentioned before, there are two choices now for the S&P 500. This traditional S&P 500, which is showing the combined signal again of SPX, SPY, and ES futures, or this S&P 500 equities, which is showing options trades and market maker hedging activity for a combined signal of all 500 stocks in the SP 500. So let's compare the two, and we have the benefit of hindsight right now. So both are providing pretty good signals. The S&P 500 signal here seems to be more in sync with the actual price action for the SP 500 today. And this S&P 500 equities, this is really influenced more by the top 7 stocks in the SP 500, which is the Mag 7. And that is typically what I've been looking at. That signal has been around for quite a while. And that's what I've been looking at for NASDAQ. So let's take a look at S&P 500. For the S&P 500, I'm going to zoom in on this chart. So we know we've looked at Bookmap. It's been a pretty choppy day in the S&P 500, up and down. So let's just zoom in on this and look at one setup, short setup in the morning. Hero signal falling, starting just right around 9:35. Traders taking negative delta options positions. Let's go to Bookmap. Go back to ES. Zoom in. All right, so again, up and down day in the SP 500. We'll just take a look at this first leg lower. This is right after the cash open. Volume dots and Bookmap showing market buy minus sell. Oops. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So a quick move up. And then as options traders started taking negative delta positions, aggressive sellers came in, moved price lower. And need to zoom just a little bit, zoom out. Down to the 500, SPY 500 put wall. All right, let's take a look at NASDAQ. So a more bearish day here in NASDAQ, especially earlier. So let's go back to Hero now. We'll take a look at the Mag 7 signal, and we can compare the NASDAQ, which shows a combined signal for QQQ and NDX. So good signal in the morning for a short, right around 9:40. And actually that was a little bit better than the Mag 7, which really didn't start to move lower until about 9:55, right there. All right, so we'll go back to the NASDAQ signal. So better signal from NASDAQ in the morning. Let's go back to Bookmap. Again, this NDX 396 zero gamma level acting as resistance. NASDAQ makes a series of lower highs. A little bit cleaner, I thought, in the SP500 today. All right, let's take a look at some stocks. So we know that AMD and Amazon reported earnings after the market closed. So let's take a look at Amazon first. And I'm rushing through this so I can be ready to show the live market at 2 p.m. All right, so Amazon reported earnings after the close. So this is a setup that I posted in Discord this morning. It turns out a short was better, looking at hindsight, but in the morning, this was a pretty clear long setup. Quick move down to 179, trend break. Aggressive buyers come in, shown by the green volume dots. CVD, rising cumulative volume delta, pretty obvious price target at 182. That was also the opening print, right around 182. This is very typical of a stock. This is the heat map and book map showing history of the limit orders in the order book. These are limit sell orders. For a stock, they typically come in just a few seconds after the cash open and remain there until they're filled. So let's see what options traders were doing. Let's go to Hero. Zoom in on this a bit. All right, so this is the Hero signal. Again, quick move down. Options traders initially taking negative delta positions. Flow alert comes in. This signals significant option activity. In this case, acting as a very good mean reverting signal. Options traders start taking positive delta positions. And as price reaches that 182 level, that's right here, options traders take their foot off the gas and price starts to move lower. So let's zoom back out now. So as options traders took their foot off the gas, price moved lower, a bit of a move higher, up to 181, and then back down again. So options traders having a strong influence on Amazon today. Let's take a quick look at one other alternative trade for Amazon, taking advantage of the implied volatility drop. So this is an iron condor. This is a simulated trade. This is not my position, just a simulated trade showing, and this was a 5-point wide iron condor moving out the short strikes beyond the expected move, which was around plus or minus just under 7%. So this was, and you could have taken full profit, 932. Almost full profit. All right, so an alternative trade for Amazon. Let's take a look at AMD. I've got about a minute. And here a much more bearish reaction. Setting up a short right around somewhere between 945 and 950. Let's go take a look at Bookmap. So except for this short move up, traders were taking negative delta positions. AMD moving lower. All right, I've got 30 seconds. We'll go to Bookmap, take a quick look at AMD, and then we'll get to the SP500. All right, so very bearish order flow here in AMD. Notice all the magenta volume dots. CVD falling. All right, let's move on to the SP500 now. And get ready for the FOMC. I'm going to have to zoom in a little bit here. So we'll watch this for just a minute and then take a look and see what options traders are doing. All right, so the Fed funds rate is unchanged as expected. Now the algos will be parsing the statement. So an initial move higher. So if we look at this chart at the end of the day, most likely the price action before the reaction at 2 p.m. will look like a flat line. That's pretty typical. All right, so that initial move higher, SP500 acting as resistance, also the lower weekly expected move. All right, I'm watching CNBC on another computer. Risk to achieving dual mandate have moved toward better balance. All right, let's see what options traders are doing. Go to Hero. Let's go back to the SP500. Oops. We'll go to the SP500 signal. And we'll have to zoom way in on this. Right, the initial reaction taking positive delta positions. And the Fed repeats expectation to hold rates unchanged until it looks like inflation is moving toward the 2% target. All right, let's go back to Bookmap. Note here that VWAP, shown by this light, whoops, wrong tool. VWAP, shown by the light blue line there, that's just above point of control, acting as support. Let's go check Hero again. All right, so Hero up, down, now moving higher again. And the Fed repeats inflation has eased, but notes progress has stalled. Let's check NASDAQ. NASDAQ moving higher. Looks like now up above the NDX 0 gamma level that it acted as resistance earlier today. We'll see if it can hold that level. So again, the Fed expectation is to hold rates at the current level until they're confident that inflation is moving. All right, so it looks like that 396 0 gamma level did act as resistance again, along with the lower weekly expected move just above that. Let's go back to the SP500. More choppy price action. Let's take a look at Hero again, see what options traders are doing. All right, so now starting at 2 p.m., Hero making higher lows and higher highs. All right, let me know what you want to do. Do you want to continue to watch this or move on and take a look at some stocks? All right, WRB wants to continue to watch the Fed reaction. Note some buyers coming in. Oops. Buyers coming in at 5,055. Let's darken up the heat map a little bit. Wrong thing. Here we go. Darken up the heat map a little bit. This is pretty typical. Note all this liquidity removed just a few minutes before the announcement, except for this level right here. Now again, some coming in at 5,055. All right, Anurag and Fadi Chi-Town both want to watch this as well. And Mark, using trading price and time method, says action when Powell speaks in 30 minutes, chop until then. That's most likely the case since there was a 99% expectation for the Fed to leave the target rate unchanged. So that's a good observation, Mark. Yeah, so the market participants will definitely be looking for for changes to comments in the press conference. So they've already parsed the statement, looked at any changes in language in the statement, and the expectation that the Fed would leave the rates unchanged. That was, of course, 99%. All right, Caesar says, could you please explain what that iceberg at 5,055 area on the chart means? So this is the iceberg indicator, and it looks like it was actually, it may be difficult to see. We'll zoom in a little bit more. There's a dashed blue line. It looks like that's pointing to this magenta volume dot right here. So this is the on-chart indicator for Iceberg orders. Blue below price, that indicates buy Iceberg orders. That's showing one execution of 150 contracts. So that's what large traders use to hide their size. They use Iceberg orders. So that also appeared in the subchart indicators, this little bump higher. So it looks like that was actually right around 5,057. So yeah, you're welcome, Caesar. Caesar says, where to see the iceberg in large order. So those large orders, that different players. So that's already consumed. So we don't know. Didn't have a chance to look at the large to see if that was one large order or multiple orders. Could be multiple orders. So we know that this was one execution here by this on-chart indicator. And these were likely, I believe I looked at it right before price slice through that was maybe 625 contracts. So just different players there. We can zoom down just a little bit here. What I want to show, this may be difficult to see, is this line right here. So there are a lot of orders, a lot of buy orders at 5,050. This large line here is showing that that's one large player mostly, maybe 85%. One large player with those orders down at 5,050. So that's over 600 contracts. Those are limit buy orders. Let's go back and see what options traders are doing. They don't really seem to be leading price action. We can take a look at the SP500 equities. We'll zoom in on this. Maybe in this case having a little bit more lead effect than the SP500 signal. But now making a series of lower highs. All right, back down to VWAP. Point of control moves up just a little bit. So looking at the landscape here in Bookmap. Limit buy orders right around 5,050. Again, this large trade indicator indicating this is mostly one large order, and then limit sell orders up above right around 5,065. Also the large trade indicator indicating that is, it looks like maybe 90% one player there. So liquidity down at 5,050 and above at 5,065. Anurag asks, do you think the market is manipulated by big players and market makers? I really don't, I don't have any opinion on that. I think that, again, my key tenet is that options trades and market maker hedging activity are key drivers of price for the SP500, the NASDAQ, and large cap tech stocks. Now, options market makers, they're not manipulating the market at all. And big players may, I don't know. That's not something that I consider in my analysis. But options market makers, all they want to do, their only job is to make markets and hedge their delta exposure. All right, so that's what I think about that. All right, so let's go back. Let's see what options traders doing. Let's go back to the SP500 signal. So I think Mark is right. Chop until the press conference at 2:30 p.m. Eastern Time. Let's go take a look at NASDAQ. And pretty narrow price action for NASDAQ as well. Let's take a quick look at one other stock, and then we'll get back to the SP500 and NASDAQ here. I did want to show NVIDIA today. Very bearish day here in NVIDIA. Reacting in sympathy to AMD and also Supermicro, SMCI. I think SMCI was down substantially today. Anyway, very bearish day here in NVIDIA. Let's take a look, see what options traders are doing today. I'm going to zoom in. This was a nice divergence short setup. Notice from the open, hero signal was bearish. Price moved up, setting up a nice divergent short right around 945. Then a lower high, that would have been a little bit safer entrance for a short right around just before 955. Go back to the SP500, take a look at NVIDIA. There's that short setup. The way I'm not zoomed in here. I don't want to zoom in. There's that double top, and then the safer entrance just before 10 a.m. 9:55 at VWAP. Then NVIDIA continued to make a series of lower highs. Very bearish order flow, cumulative volume delta falling. You can see all the magenta volume dots. All right, let's go back to the SP500. Very nice short setup in NVIDIA today, reacting in sympathy to AMD and SMCI. So more chop here in the SP500. Liquidity remains at 5,050. Looks like they pulled some of it. Looks like they pulled some of it. You can see the shift from dark red to orange. So some of that liquidity pulled at 5,050, but remains at 5,065. Limit sell orders. NWRB says spoofing around ES. I'm not sure that's spoofing. We don't know if they intend to trade or not. Apparently, they're not. That's far enough below that that's not manipulating the market in any way. Very little iceberg activity. Let's go back and check NASDAQ. Pretty narrow price range after the announcement. Take a look at ES. Let's go back and check options trades. Check Hero. After that initial move up, the Hero signal for the SP500 now trending lower. Let's check the SP equities and indicator. Zoom in on that. Paints a little bit different picture. Now moving up. So kind of conflicting signals here for the SP500. Caesar says looks like a light day for the total. Yeah, so we'll go and check all these signals. So for the S&P 500, traditional signal, 526 million. Yeah, that is very small, very light. SP equities, minus 1.37 billion, still pretty light. NASDAQ, 274 million positive. Mag 7, minus 885 million. And keep in mind, this Mag 7 signal is a pretty large component of this signal, the SP 500 equities signal. And this signal has been moving higher since around 115, 120. So no real change in trend, making a series of higher lows and highs that started right around 120. Let's go back to the SP500, go back to Bookmap. So after moving down, testing this liquidity that we saw earlier, then moving all the way down to VWAP, now the SP500 is grinding higher. And let's go back, take a look at what options traders are doing again. All right, so the S&P equity signal continues to move higher. At this point, seems to be more in sync with price action. Yeah, let's stick with this. More in sync with price action. All right, I've got 4 or 5 minutes left. Does anyone have any stocks they want me to take a look at? All right, so now it looks like the S&P 500 broke through that liquidity at 5,065. That was consumed. Also, that was a stop run up to that level and above. That's shown here by the rising yellow line. You can also see the aggressive buyers coming in, moving price up to that liquidity and beyond, but buy stop run, stop orders fueling that move higher up to 50.70. Next liquidity target up is at 5,075, just above the SP500 level. So remember, a lot of this liquidity was pulled before the announcement, then starting to come back in. A few minutes after, getting filled there, also getting filled. Now this, they've decided they don't want to sell anymore. Let's zoom in on that. So pulling that liquidity. Maybe adding a little bit higher. At 77.78. Another Iceberg buy. This is small, but that's enough for the on-chart indicator to show buy Iceberg orders, 100 contracts, 1 execution. So some liquidity at 75. Looks like they're just pulling now a little bit. Next level above that, 77, 78. So far, they're remaining in the order book. Now, large trader selling with Iceberg orders, or 1 Iceberg order, 100 contracts executed, selling there. All right, so the press conference begins now. So I'm going to wrap up my webinar today. So everybody can, if you want, watch the press conference, trade that. Let's take one last look at Hero, and then I'll call it a day. So options traders in the S&P 500 equities, that signal continues to move higher. All right, Mindful Trading Club, can you tell us about what market data you use? All right, so here's, let's go to Bookmap quickly. All right, so I have futures data and stock data. And for futures, I use Rhythmic. And Rhythmic does provide MBO, market by order data. And that's what's used with the stops and Iceberg indicator. Now, quick drop at 503. So I use Rhythmic data for futures and DX feed data for stocks. So that's what I use. All right, everyone, I'm going to wrap it up. Thank you very much for your questions and comments. Good luck trading this afternoon, and I will see you on Friday. Remember, jobs report on Friday morning, 8:30 a.m. Eastern Time, and we'll talk about it on Friday. All right, thanks, everyone. Have a great afternoon, and I will see you on Friday. Bye.